Welcome back, crypto legends and market mavens. Book, Fed just got slammed with subpoenas. Powell's dropping truth nukes, Trump's playing 4D chess, and Bitcoin is quietly loading the biggest rocket we've seen in years. Buckle the hell up. 2026 is about to go absolutely nuclear. Let's ride this wave together and stack serious gains. In a stunning turn of events that's sending shockwaves through Wall Street and the crypto world, Federal Reserve Chair Jerome Powell has fired back at what he calls unprecedented threats from the Department of Justice. Imagine this. Grand jury subpoenas landing on the Fed's doorstep, hinting at criminal indictments, all amid whispers of political arm twisting from the Trump administration. This isn't just another Washington drama, it's a high-stakes battle that could redefine how America sets interest rates, safeguard the dollar's global dominance, and turbocharge Bitcoin's rise as a hedge against chaos. As markets teeter on the edge, with stocks at all-time highs and geopolitical tensions boiling over, we're witnessing history unfold. Buckle up as we dive deep into this explosive saga, unpack its ripple effects on Bitcoin predictions for 2026, and explore why this could be the catalyst for a crypto supercycle. If you are searching for insights on Fed independence, Trump Fed pressure, Bitcoin 2026 forecast, or the Crypto Clarity Act, you've come to the right place. This comprehensive guide breaks it all down. The unprecedented Fed subpoena, a clash of titans. Let's set the scene. Late on a Sunday night in early 2026, the Federal Reserve drops a bombshell video statement from Chair Jerome Powell. The Department of Justice, DOJ, had served the Fed with grand jury subpoenas just days earlier, on Friday, threatening potential criminal charges. This isn't about some minor infraction. It's tied to Powell's testimony before the Senate Banking Committee back in June of the previous year. That hearing delved into a multi-year renovation project for historic Fed office buildings, a seemingly mundane topic that's now being weaponized. But Powell isn't mincing words. In his statement, he asserts a deep respect for the rule of law and accountability, emphasizing that no one, not even the Fed chair, is above it. Yet he frames this action as part of a broader pattern of threats and pressure from the administration. This unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure, Powell declares. He dismisses the renovation project and congressional oversight as mere pretexts. The real issue? The Fed's refusal to bow to political demands on interest rates. For context, the Federal Reserve has long been designed to operate independently from the executive branch. This independence is a cornerstone of U.S. monetary policy, ensuring decisions on interest rates are driven by economic data, things like inflation trends, employment figures, and growth projections, rather than political whims. It's why the U.S. dollar remains the world's reserve currency, trusted globally for its stability amid political turbulence elsewhere. But under President Donald Trump, that veil of independence is being tested like never before. Trump has been vocal about his desire for lower interest rates to juice the economy, boost stock markets, and perhaps even secure political wins. We've seen public tweets, interviews, and behind-the-scenes lobbying pressuring the Fed to cut rates aggressively. What we didn't fully grasp until Powell's announcement was the escalation, subpoenas, and indictment threats. This move crosses a line that's literally never seen before, as many analysts are calling it. Powell, with his experience serving under 4 administrations, both Republican and Democratic, vows to stand firm. Public service sometimes requires standing firm in the face of threats, he says. I will continue to do the job the Senate confirmed me to do with integrity and a commitment to serving the American people. This defiance isn't just rhetoric, it's a calculated pushback. Reports from outlets like the New York Times suggest Powell might have strategically leaked the news over the weekend to jolt markets lower, knowing full well that stock dips are a sore spot for Trump. It's 3D chess in real time, with both sides maneuvering for advantage, but at what cost to the nation? This feud erodes trust in institutions, heightens uncertainty, and could lead to volatile swings in financial markets. Why Fed independence matters and how it's under siege. To understand the gravity, let's zoom out. The Fed's mandate is clear: achieve maximum employment and stable prices, free from short-term political interference. History shows why this matters. In the 1970s, political pressure contributed to runaway inflation, eroding purchasing power and economic stability. The Volcker era in the 1980s restored independence, taming inflation through tough, unpopular rate hikes. Fast forward to 2026, and we're seeing echoes of past pressures amplified. Trump's administration has ramped up calls for rate cuts, arguing they're needed to combat perceived economic slowdowns. But Powell and the Fed have resisted, basing decisions on evidence and economic conditions rather than political pressure or intimidation. This standoff raises profound questions. Will monetary policy remain data-driven, or will it bend to executive will? If the latter, it could undermine the dollar's status, invite inflation volatility, and spook international investors who rely on the Fed's autonomy. Critics argue this isn't good for anyone. A politically influenced Fed might prioritize short-term gains, like pumping up stocks before elections, over long-term health. On the flip side, supporters of Trump's approach claim the Fed has been too hawkish, stifling growth. Regardless, the subpoena saga lifts the veil on just how fragile this independence is. As one commentator put it, the Fed needs to stay independent, in my opinion. Losing that could ripple globally, affecting everything from bond yields to emerging market currencies. Market reactions, stocks, metals, and the Bitcoin enigma. So, how is this bombshell affecting markets? Stocks and risk assets are hovering at record highs, buoyed by optimism around potential easing. Yet, underlying tensions are evident. Precious metals like gold and silver are ripping higher as sovereign nations diversify reserves amid uncertainty, a classic flight to safety. But the real head-scratcher? Bitcoin's muted response. This environment screams Bitcoin was created for this. Born from the 2008 financial crisis, Bitcoin thrives on distrust in centralized systems. With the president clashing with the Fed chair, geopolitical risks escalating, and institutional money flowing in, you'd expect a God candle, a massive price surge. Instead, we're seeing a lack of pump, with Bitcoin consolidating rather than exploding. Why the lag? Some point to broader headwinds in early 2026. Markets are pricing in uncertainty, and Bitcoin, despite its hedge status, isn't immune. Analysts note that while stocks soar, crypto's correlation with risk assets means it could dip before rallying. Still, the absence of an immediate bid is weird, as many in the community are saying. If Bitcoin doesn't catch fire soon, it might signal deeper issues, or perhaps it's coiling for a bigger move. 2026. Outlook. Headwinds, tailwinds, and bold predictions. Looking ahead to 2026, my take is optimistic yet cautious. I believe Bitcoin will shatter its all-time highs this year, potentially invalidating the traditional 4-year cycle tied to halving events. But before the fireworks, brace for turbulence in January and February. We could see lower lows, with Bitcoin dipping as much as 40% from last year's peaks, possibly testing $75,000 if things sour. 3 major headwinds loom large. 1. Fed shake-up uncertainty. Trump is poised to replace Powell, possibly sooner than expected. This transition breeds volatility, even if the new chair ushers in a bullish easing cycle. Markets hate unknowns, and a leadership change at the Fed could trigger sell-offs. 2. Government shutdown risks. Remember the record-long shutdown last year? It's back on the table, with funding expiring around the 31st of January 2026. Negotiations could drag, paralyzing government functions and denting investor confidence. Shutdowns historically weigh on equities and risk assets like crypto. 3. Supreme Court tariff decision. This quarter, the Supreme Court rules on the constitutionality of Trump's tariffs. If deemed unconstitutional, it could be a market boon by easing trade tensions. But the lead-up fuels uncertainty, with potential for volatility if the ruling goes against expectations. Flip the script to the mid to late 2026, and tailwinds take over. 1. Midterm elections momentum. Heading into midterms often injects bullish sentiment as politicians push pro-growth policies to woo voters. 2. Easing cycle and business boom. The Fed's ongoing rate cuts signal easier money, stimulating borrowing, investment, and economic expansion. Perfect for risk-on assets like Bitcoin. 3. Crypto Clarity Act passage. This is the big one. The bill, aimed at providing regulatory clarity for digital assets, has a markup scheduled for the 15th of January, 2026. Passing it before midterms would be extremely bullish, unlocking institutional capital and mainstream adoption. If these align, Bitcoin could R.